Hey there, everyone. Welcome to this special edition of The Final Bar, the top 10 charts to watch for February 2024. It's been a lot of fun putting together these episodes once a month, really reflecting on what has just occurred, but focusing on some actionable ideas, some key charts that I think will tell the story. If we have a crystal ball of sorts, will tell the story of the month to come. Grayson Roze has joined me for a number of these, and he's back with us live today. Not here in our studio in Redmond, Washington, but remotely from Southern California. Grayson, welcome. Thanks for taking some Seattle rain with you down to Southern California. But despite the rain, how are you doing down there?
I am good, but yeah, what a rip. I try to escape the rain and I bring it with me. That's how it goes for us Seattleites, I guess.
I don't want to say I'm getting a guilty pleasure on this, but you did say as you're leaving the airport, you said, I'm going to get away from the rain. It's going to be great. But I think you have a pretty good setup down there. And thanks for taking some time to join us for the top 10 charts to watch for February.
Of course.
Obviously a crazy week, a busy week with a lot of movements, a lot of, the Fed meeting, a ton of earnings. When you are kind of taking a step back and reflecting on what you're seeing, like where's your head at in terms of just the general market conditions here?
Head is feeling pretty good. I got to say, I'm pretty excited that the Fed is not talking about cutting rates. I actually see that, contrary to what a lot of people have been saying recently. If the Fed came out and said they were going to cut rates starting in March, I would be pretty scared. Fed doesn't do that when times are good. The Fed shoots that shot when times are bad and there are things that they're worried about. So the fact that they're actually holding steady, I'm pretty excited about that. More importantly, technically, we got a market that is strong. Maybe a little bit too strong, which actually I think for me at this point is starting to become a little bit of a point of concern. We're seeing that S&P 500 chart that you got right up there, continuing to just trend higher, sitting way above the 50. What I do like, though, is that we're seeing the strength kind of distribute out across some of these other sectors. We're seeing things like financials and industrials and communication services really working.
Yeah.
And also, to me, when I look at mid caps and small caps, those areas of the market have really been consolidating for the last few weeks. Now, today, actually, what's interesting, you're getting this real beautiful kiss of the 50-day on those, mid caps and small caps like the S&P 400 and 600. They're actually getting, catching a bid, bouncing off their 50 days. And within the consolidation that you're seeing in those groups, I really like that. Yeah, look at this. I mean, that's a breakout and a retest and a bounce. We're kind of seeing the same for the Russell 2000 there. The S&P 600 even looks a little bit better than IWM. But, I think there's a lot to like still in this market. So I'm feeling pretty good.
We had Ralph Acampora in the office earlier this week looking at a beautiful chart, which I'm super excited for you to enjoy when you get back to the office. But I mean, just talking with someone like Ralph, I mean, you think about the conditions here. He made a career out of recognizing signs of strength and when they're persistent. Yeah. And I feel like even with a choppy week like this one, and NASDAQ was down 2% midweek after the Fed announcement. But overall, we're still making higher highs and higher lows. And the fact that you and I didn't have a lot of trouble finding 5 charts each to throw together, I guess, is an encouraging sign here.
Yeah, I absolutely think it is. And also coming through earnings, which typically, brings a little bit more volatility and craziness and news headlines and all that stuff with it. The fact that the markets have remained strong and have actually continued to move higher. We've seen a lot of, really strong earnings reports out of a lot of names. And I think there's a lot to like in this period. So 2024, I think, is still set up as a really strong year.
January certainly has been a resilient month. And let's get to our first of the 10 charts here. You're going to kick us off. We're going with AZO, AutoZone, Nevada. Talk us through AZO and what you like here.
Well, I'm a big car guy, so I got to go with AutoZone, right? No, what I like on this chart is the breakout here. You're seeing a lot of consolidation in AutoZone. This thing has been chopping around a lot. A lot of buyers and sellers getting tossed out of this name as it's chopped around for months. But now you're finally seeing a nice breakout above that clear resistance that the stock has faced. You're actually, more importantly, seeing a bit of a test of that. I want to see us bounce here. That's going to be the key for me. But I've drawn that green line at kind of my line in the sand, right? That's that breakout level that I'm watching really closely here. You're seeing the 20-day catch up. That's that little dashed blue line. So you've got a breakout. You've got a stock that's actually pulled back after that breakout. Hopefully, is going to catch a bid here. That's the thing to watch for. But if AutoZone can bounce here, really, really strong setup. I also like the relative strength. That's that top line starting to turn up. We've seen weak relative strength in this thing for a little while. especially at the end of last year and through January.
Yeah.
But relative strength has finally been picking up on this name on the breakout, really been kind of flying higher. I think there's a lot to like. Discretionary has been a space that's been relatively strong, a bit choppier when we kind of drill down into discretionary. Some of the big names have been really pushing that thing higher. But still, discretionary overall has been a stronger sector. So I like the tailwinds that AZO has going for it here.
That's a good way to kick us off. And I mean, from a technical perspective, just a classic, pattern of breakout above resistance and then a pullback and a retest. I mean, that's one that you and I have highlighted a number of times on these sort of monthly exercises, and I think this is the same. And I would agree with you. I mean, charts like this, when you talk about leadership rotation, when I was talking with Ralph earlier this week, we talked a lot about, mega cap names pulling back, but other stocks starting to reemerge. Something like an AZO that was it was a real outperformer in the fourth quarter, but now the relative strength starting to improve as it's breaking out. It's sort of an encouraging sign, a bit of a rotation for the name, but also speaks to diversification away from those mega cap names, I guess, right?
It does. And one other thing that I would point out here too, I think you've got my longer term weekly chart saved somewhere. If we can pull that up, I mean, look at AZO over the last 7.5 years, an incredibly strong trender here, a big outperformer too. You look at the same thing, relative strength up in that top panel. This thing has outperformed the market, and it's done it pretty consistently by just trending higher. So what you're seeing right now, really, on the shorter term, it's a breakout on that daily chart. But on a longer term basis, it's a continuation of that weekly trend that we've seen for many, many years, which to me is a thing of beauty. You got that long term strength, but the short term opportunity. I like that pairing.
Yeah, classic combination. That's a strong start, Grayson. I like it. All right, we're going to my first pick, which is Stryker, SYK.
Beautiful.
I forget if I wrote you on one name for sure. I think, which is my next one. I told you this is mine. You can't have it. But I think this was one that was on my mind as well. Last month when you and I sat down, I had a couple of healthcare names in there. I think you had one too. I remember talking about Boston Scientific, BSX, talking about biotech like Amgen, and those of course have had really nice runs since we talk about them. I think Stryker is another one of these healthcare stocks. And while healthcare as a sector has not done particularly well on a relative basis, I'm encouraged when you look for names that are on the move that are breaking above resistance. Something like SYK seems to come up. And this is one that came up on my radar earlier in January as a 3-month breakout. So I'm often scanning for new 3-month highs and new 3-month lows. And Stryker actually made a new 3-month low in October as the market was selling off, but then really rebounded nicely and then retested resistance right around 300, 305. And then in the last month has broken above that, just like you mentioned with AZO, pulled back to the breakout level and now resolving to the upside. So this week in earnings week, it gapped higher with a nice result, and so far kind of following through to the upside. But overall, I think the daily chart is pretty constructive. Similar to what you said with AZO, I think looking at a Stryker, the weekly chart is what really excites me, because you can tell that while the daily chart, it feels like it's run for a little while, the weekly chart, you zoom out, you see that it's actually could just be getting started of a breakout of a pretty significant base. So I think Stryker, there's a Freudian slip. Stryker is a good one. And the other thing I would mention is with the gap higher, it's now extremely overbought. And when things get really overbought, it tends to mean two things. Number one, it's had a pretty good run. So at some point, we probably pull back a little bit, which I think could be healthy. But the other thing, it actually tends to be a long-term, pretty constructive sign, because it tells you there's a lot of buyers coming in, a lot of upside momentum. So even with the gap included, I think this still could be a pretty good spot to be for further upside in the first quarter.
I like this pick a lot. And you know what else I like, actually? You've got a feature turned on. I have the same thing. The full quote is a feature that you can turn on for Sharp Charts, a little checkbox there. And what that's going to give you, like Dave's highlighting, is all of those different, additional fields. So you've got next and last earnings in there, and you've got earnings behind this thing, which at a time like this, I think becomes very, very important for all of us as we're evaluating these setups. That's why I always recommend that people turn on that full quote feature on their charts. You get to see that right on your charts. You've got the earnings behind this thing, which I think is a nice little boost for it. You're not worrying about a big volatility event coming up in front of you if you do put the trade on.
Yeah, great point. That was a recent enhancement that we added the earnings dates in there. I think that was a really nicely done. Let's get to your third pick. And actually, I just realized we're staying in the healthcare sector. So how about that? HCA, another of multiple healthcare names kind of breaking out here. What do you like about HCA?
Another beautiful breakout. I love the relative strength on this thing. I mean, this
Yeah.
this has just been outperforming. A change of character there. You saw the underperformance for a little while in 2023, but we've seen a dramatic change in character. Kind of like you're saying too. Bottomed with the market. I think that was probably right around October. Just looking at this chart, and has really rallied back. Made a beautiful breakout, a gap higher. I believe that was on earnings. Again, I'm looking at a name like this and saying, okay, you probably want to wait for this thing to pull back, hopefully retest that breakout. But I do also love to see when you get a big gap like this, and then the thing continues to run higher with some hollow candles there too,
Yes.
indicating that it's not just opening and then collapsing during the session. It's actually opening and running higher during the day, especially on a day like today. You got that big, tall, hollow candle. So I like the price action on this. I like the breakout. I like the space too.
Mm.
Healthcare has been one of those spaces that has been really, really strong. The interesting thing about the strength we've seen out of healthcare in the last couple of months, it's been tough to actually find relative strength out of healthcare. So you've seen a
Mm.
strong sector on an absolute basis and a lot of strong names on an absolute basis. But when you compare that to things like VTI or SPY, things like the total market or the S&P 500, they haven't actually been really outperforming the market. HCA is one that has been very, very different. So you've got a lot of strength coming out of the sector, a lot of strength coming out of the group, and it's one of the leaders in that space that's actually outperforming the market. So I like to see that combo really set up nicely here.
This combines a couple things. You mentioned, I mean, we were highlighting a couple breakouts early on, which I think, I mean, again,
Yeah.
I earlier on in my investing career, I missed a lot of things because when they would break out, I would feel like it was way too late. But one of the
Hmm.
things I've learned over time is when things break out, that's usually the beginning, or often is the beginning of much larger
Exactly.
compounding over a longer period of time. So don't be afraid
Exactly.
to buy new highs if the pattern's constructive. And then
Yeah.
100% agreed on your comment on the gap there. I think, especially around earnings, you'll have a lot of stocks that gap, and the question is, what do you do with it? And I always tell people,
Hmm.
look for the next day or two and see. Now that we've reset on HCA from like 285 to 300, are additional buyers coming in? The chart's telling you they are, right? People are willing to pay more and more for the stock. That's
Right.
that's what propels things to multiple gains going forward. Yeah,
Absolutely.
great. No, great chart. I like that one. I like both of these healthcare names. I think that's a ripe
Yeah.
space for stock picking.
Good space right now.
Getting to
What's your
okay.
second pick?
Yes, so mine, hold on here. Oh, I'm missing it. My fourth pick, here we go. VMC. This was the one, as a matter of fact, that I did write you earlier this week and said, hands off, this is mine.
Yes.
And this came actually out of a conversation with Ralph Akampora. So all credit to Ralph, one of my mentors and one that's inspired, so many of us to really grow as technical analysts and focus on the important things. When I was talking with Ralph, we talked a lot about the growth leadership that we've seen in the last, really in the last year, but especially coming out of the October lows and mega cap names, the Metas and others that have had crazy runs. And my conversations with Ralph, my conversations with a lot of other guests on the final bar have been about leadership rotation. And Ralph's comment
Yeah.
was, when the growth stocks have had the run that they've had, it's undoubtable that, I mean, it's certainly likely that you're going to have some pullbacks, which we're starting to see this week with Alphabet and
Hmm.
others kind of resetting. But the question is, are people rotating out of those names and into like gold and very defensive positions, or are they just rotating to other ideas within equities? And I think when you
Right.
see resurgence in industrials, in financials, at times in energy, in industrials, I mean, this is what tells you that investors are staying within equities. They're just rotating to different places. And it could just be a leadership rotation that's pretty normal at this part of the cycle. So that caused me to look at industrials and healthcare and financials. Another run after I talked with Ralph, and VMC was one of the names that quickly came up on my screens. It popped up on my new 3-month highs list when it popped above 230 because that pushed it above the August high. So if you look, common pattern that we've seen with equities here in the last 6 or 7 months is, made a high kind of in the July-August region, summer of last year, sold off into the October low. In the case of VMC, tested the 200-day moving average, bounced off of it, and then this nice pattern of higher highs and higher lows. Then we're retesting resistance and we're sort of range bound. And what I like about this name is it's not overextended. It's kind of right at that breakout point. And so what I like to do with this sort of chart is put it in a separate chart list, sort of the watch list names, right? Sort of the potential breakout names, and then just set alerts on those charts. and review them regularly and just see which ones are we seeing some pops to the upside. And I think, this one for now seems like it's setting up pretty well. I'd feel better if it could get a foothold above 230 and really clear that August high. But taking a shot at something like this and just relying on good money management, thinking of the recent swing lows, the 50-day around 220, as long as it holds that on pullbacks, I think this is a pretty constructive chart. And at a time when so many stocks are so overbought, this actually isn't. The RSI is kind of in the 50s, so it tells you that there's potentially some room to run on a breakout there. So I think in an environment where growth has really almost matured in its uptrend, stocks like this that are sort of earlier on in their breakouts, I think could be that next leg higher for leadership. So VMC, an interesting one to watch, I think, in February.
I think that is a great pick because especially this group has been on fire, Dave. I mean, the home builders, building materials, a ton of those industrial names, overall, but especially in kind of the home building and construction, building materials stuff. Gosh, that space has just been an absolute rocket ship. So, this thing is backed not just by its own chart, it's backed by strength throughout so many of its kind of brothers and sisters in the rest of its group. I think it's a great pick.
Yeah, good charts and good groups don't tend to be a bad thing, I've experienced, in my experience.
Good
That's
charts
a good
and good groups.
All right, your third pick for this one is Jefferies. So this is the first financial stock we've talked about. It's interesting because the financial sector, in a lot of ways, was very challenged, but banks, regional banks, a number of them have started to rotate higher. So talk to us about Jefferies.
Yeah, JEF, another one that's in a great space. Financials have been on fire in the last really 4 months. Financials were basically one of the leading sectors at the end of 2023, Q4 of 2023, and then the month of January, financials have continued to outperform even things like tech in a lot of cases. So tons and tons of these financial names that have really struggled in the last couple of years are now coming out of these beautiful bases, making some beautiful breakouts, and Jefferies is a great example of that. Earnings have been strong. This one is another one, obviously with so many financial stocks reporting earnings earlier in the season. Jefferies has earnings behind it, as you can see there at the top of that chart, and just making a really nice breakout and chugging higher. You can see that 20-day, it's continuing to kind of test that. And every time it meets that 20-day, it finds some buyers and catches a bid and moves higher. Again, I like to see the breakout. I like to see the relative strength on this. I would like to see the volume be a little bit stronger, but ultimately this is a name that's outperforming the market on its way up. And what's interesting about this right now too, so I've got two lines drawn across this chart. One is kind of the lower level breakout. We adjust our charts here at StockCharts for dividends. So this actually has dividends priced into the stock. And you can see that it made that sort of initial breakout, actually broke out, came back down, retested it, and we've seen a bounce. That second line that I have on the chart, if you look at this on an unadjusted basis, which you can do by typing a little underscore before the chart, you can actually see that this is breaking out now on an unadjusted basis. So on kind of absolute price highs, this is breaking out. So those two lines that I have are sort of the initial breakout on the adjusted chart, and then now a secondary breakout on the unadjusted chart. And it's continuing to find strength and trade above those key levels. So I like what I'm seeing here. I also like to see it kind of chopping around some of these breakout levels too. So you're really seeing buyers and sellers kind of digest those price levels. And if we can see the bulls push this thing higher, it just gives me a lot of confidence that we've seen enough of a shakeout around those key breakout levels, and price is going to push on higher. So I like what I'm seeing here in Jefferies. Again, relative strength and group strength. There's a lot to like.
What I love about this exercise, Grayson, I mean, we've known each other for a couple years now, and I would say that we still, this is an idea I've not seen until now. I love that idea, putting the unadjusted and the adjusted resistance levels on the same place, and just realizing the relationship there. And again, it speaks to the strength that we've been able to eclipse those and push higher. You've on a couple of the charts, you have the same moving average combination, the 21-day, the 20-day EMA, I think, is the shortest one, right?
Yep.
And then you have the 50-day, the 100-day, and the 200-day. Talk to me about the 20-day EMA and how you actually use it, because we're kind of testing it now again this week.
Yeah. So I use the 20-day EMA. You can see that the primary lines for me are those thicker, solid, the 50-day, the 200-day. Yep. Those are kind of the key traditional moving averages. I've got these other two on there though, the 100-day and the 20-day, which are important to me, but they're not sort of primary.
Got
So
it.
those I've actually kind of faded them out, right? Made them little thin dash lines. And they're not necessarily primary to me, but I do still want to have them on the chart. To me, the 20-day is just an interesting thing to follow, especially when you see a breakout like this. How are we trading around that very short-term moving average? The 20-day is considered more of a trading moving average, right?
Yeah.
A very, very short-term kind of look. I like to look at two things. Are we catching a bid on that 20-day if we do come down to hit it? And then also, what's the direction of the 20-day? If you see us,
Mm.
bouncing off that and the 20 days continuing higher, like you've got in Jefferies, that's a really, really strong trend. It's just a nice indicator of a strong trend. When you see us break through that 20-day and you see the 20-day start to roll over and actually head lower, that's kind of a subtle sign to me. Again, faded out a little bit on the chart, but still there. A subtle sign to me that things might be heading in a different direction. And then I'm going to start to look for those kind of next up indicators like the 50. So I really, really want
Mm.
to see us hold the 50 on some of those longer term trends. So that's kind of how I use that.
I love it. No, that's awesome. And that's one that I don't normally include. And every time I see you share some charts, I usually jot down on a piece of paper, think about the shorter term kind of tactical moving average. I think it's a really good way to think about
Yeah,
it. Not as the
yeah,
most important, but as a way to just get some color on the short term environment. I like that a
right.
lot. No, good approach.
You can sort of see this actually over on the left side of the screen. If we go look at that sort of initial hump at the top there, right below that green line, you
Yep.
can see there, right? We were following the 20-day higher, then we broke through it, and we actually saw
Yep.
the 20-day start to turn around, and
Yes.
that was a sign. Hey, things have changed. We've got to change a character, change a personality in this stock.
Hmm.
It's probably not going to continue higher. And then, sure enough, it's failed to hold the 50-day. 20 across the 50-day, and so on and so forth. So that's kind of how I use that.
That's awesome. And again, what happens a lot of times, the real declines happen well after we've had some of these initial warning signs. So it's a good
Exactly.
reminder to pay attention to those early red flags, just in case the worst case scenario materializes. All right, we're to my
Exactly.
third pick, and I'll be honest with you, I debated doing some other name but I had to throw Apple in there only because of this. If we're really thinking of stocks to watch, for me, Apple is maybe the most important one of the sort of the mega cap names, and I'll tell you why. You have sort of the Meta, Alphabet, Nvidia names that have had such a run, and I think they certainly need to have a drawdown. We're seeing some of that this week, but they've already kind of established a pretty strong trend off of the October lows. Tesla is sort of the negative outlier, kind of breaking down and struggling for a lot of reasons, really looking a lot less like the rest of the Magnificent Seven. But then we have Apple, which is kind of right in the middle, right? It's not weak. It's not a broken chart. It's not something that's breaking down yet, but it's certainly not something that's breaking out. And if you look, the July peak, the December peak, and the January peak are all kind of right around that 197 to $200 a share. So this is a mega cap name. I mean, literally the biggest weight, if not the biggest weight in most things you're looking at, and it hasn't broken out yet. So I think when I'm looking at the markets in Q1, a seasonally weaker part of the year, when I see how strong the benchmarks have been, but I see Apple like this, I think, all right, one of two things is going to happen because this range is going to break. Either we break to a new high, in which case I think if you're looking for a bull sign that we're going to have extended gains beyond what we've seen, if there's any chance of the S&P going above 5,000 in any meaningful way, I think Apple has to get above 200 to kind of push further. On the other side, if Apple is unable to hold its 200-day, and all of a sudden we're talking about retesting the October lows, I don't care how great other stocks look. Like the benchmarks are just not going to be that great if Apple isn't able to hold the 200-day. And this is after this bearish divergence that we saw in November and December. That's as we were retesting the high from July of last year. So I think Apple, as an indicative chart of sort of market conditions, I think one of two things happens. Either Apple in the next month, gets above 200. The bear case is it breaks down. And I think whichever way Apple breaks, I wouldn't be surprised if the benchmarks certainly follow that strength or weakness. I would say that even the handful of names we've talked about so far, there will be strong charts that keep getting stronger. But in terms of names that really influence our benchmarks, Apple may be the most important chart to watch here, and particularly as we're testing the 200-day moving average. It's crazy that as the S&P, coming off of an all-time high in the last week, Apple's kind of at the lower end of this range here in the last couple months. So overall, I would say Apple is a really important chart to watch, just as a broader indication of strength or weakness for growth stocks.
Yeah, I think this is, a key chart, obviously, because just because it's such a driver for the entire market. It's funny, we obsess so much, right, over, market moving events like the Fed. This week, obviously, a lot of talk about the Fed, but these stocks are so big now that Microsoft and Apple reporting earnings is a market moving event. So, you've got that full quote up there at the top of the chart. You can see Apple reporting after the bell. That's something to watch. Definitely, could be a driver of the S&P 500. I like this on the 200 day though. If this can catch a bid, I like that. It's a good
Well, I
chart.
was going to say, right? I mean, and that's the thing to remember, right? If this holds, I mean, how encouraging would that be if something like an Apple really close to breaking down does not, and buyers are coming in and pushing that higher? I think
Yeah,
about strength in the first quarter. I think an Apple finding the 200-day probably is part of that bullish
right.
thesis. I would probably sketch out. So kind of right at that
Yeah,
point. And now, of course, earnings can be a binary outcome for most names, and even this week, we've seen big tech companies do just fine on earnings, but then the stock gets dinged very quickly. So I think the
yeah.
200-day, right around 180, 182, pretty important level to watch here.
I like how your green line there though at the top and the red 200-day moving average are basically drawing the ascending triangle for you here.
Yeah, that's right.
I mean,
That's
this thing
right.
has been bouncing off that 200-day, and the 200-day has been so steady.
Yeah.
This is, if we can bounce here, this is a really beautiful ascending triangle there on Apple.
It could be really constructive. We'll see if it can power above that resistance, but TBD, to be determined. All right, your fourth pick, Shopify. This is a name we've talked about before, and I'm curious what
We
you're
have
thinking as we've pushed to new highs here in January.
a couple of things. I mean, me, I got to throw a technology name in there, so I've had enough financials and healthcare and whatnot. Shopify though is my pick here, and it's funny. It is a technology company, but when I think about actually kind of what that company does and what drives its business, it's really more of a discretionary company, right?
Yeah.
They're just powering the shopping for all of these different websites online. So it's almost more of a one of those companies that kind of straddles multiple sectors, straddling sort of technology and discretionary. Definitely getting slammed today. This is an ugly day for Shopify here, but this is a volatile name. This is a name that moves a lot. I like the outperformance. I like that it's sort of trying to make that breakout again after getting absolutely slammed in 2022. Has
Mm.
really been chopping around here and is now letting that 50-day kind of catch up to it. So again, if we can see this bounce off of the 50-day, I like that. We're pulling back here on not huge volume. If you kind of go down to the bottom there, so
Yeah.
that gray line going across is going to be 200-day average volume, and you can see that this pullback we've seen has not been on huge volume. So I do like to see that, but this has been steadily trending really since the end of 2022, off those October lows there in 2022. This has, for the most part, a volatile name in it, sort of on its own, but has been steadily trending higher. And I'll do that weekly trick again, Dave. Let's jump out to the longer term weekly view on this thing. I think that's where Shopify really shines, where this is definitely a chart to watch. Huge run, out of the COVID craziness that we saw.
Mm.
What's interesting is you've got this thing trying to make a breakout above some pretty key levels, kind of right around that 75 to 80 range. And one thing that I see on the weekly, I like to look for what I call indecision candles. That
Mm.
black candle, little sort of filled black candle in the middle of kind of right at the beginning of 2022, when you see all those red candles coming down and you see that little black one kind of in the middle. To me, that's what I call an indecision candle. Yeah, right above where you were just hovering.
Mhm.
That to me is what I call an indecision candle, where you've got buyers and sellers kind of not knowing what the hell is going on. You
Mm.
close, you can see the tails on both sides of that. You've got a high, you've got a low, and you've got this really skinny little candle right in the middle. That's buyers and sellers kind of getting shopped around. When you draw that line, draw a horizontal line right across at that candle, you'll see that it
Mm.
lines up pretty beautifully with where we're heading, but also with some prior support from kind of earlier in 2020.
All right.
So there's a lot of kind of interesting price levels coming up here for Shopify if it can continue to make a run higher. And what you've seen, again, very volatile stock. But if this thing can continue to run higher, this is a name that historically can really outperform the market. Even given the massive collapse that we've seen on that weekly chart, you were still seeing 735% outperformance of the total market over the last 7.5 years.
Wow.
That's a name that absolutely flies higher. So I think on the daily and the weekly, there's a lot to watch here on Shopify. And final thing I'll say on that name, it's again kind of an indication of the flavor for growth. Shopify was a huge name in the middle of COVID when everyone was sprinting towards those big, heavy growth names. So if we can see a stock like Shopify kind of reclaim some of its former glory, I think that tells you a lot about kind of risk appetite within the tech space, within growth names, all of those different things. So that's my thinking.
Really interesting chart, and I love the multiple time frame analysis there, Grayson, incorporating the weekly chart and the daily chart. Really tells the story of that recovery off of the COVID lows. And it strikes me, I mean, the most recent big gap on Shopify was there in early November. That was earnings in the fourth quarter, and you're coming up on earnings here in a couple weeks in mid February. That can always be a pretty big catalyst. But a great chart, kind of testing the 50-day right now. That's a good example. Thanks for that. All right, my fourth one is going to. I actually am bringing up a consumer staple name, so I don't know if this is a good thing or a bad thing, but I had to go sort of a completely different look. I mean, you and I, when we get together, we often have similar, we have a similar methodology, different tools that we use, but in a lot of ways similar. We tend to like similar charts. We are often, throwing tickers back and forth. And most of the time when you share an idea, I'm like, yep, that's pretty much how I would think of it. Hershey's is an interesting one because it's arguably in a bottoming phase. And, again, thinking of like the Weinstein stage analysis, and I kind of think of the, trend in three phases. You've got a downtrend, an uptrend, and a sideways, right? Or accumulation, distribution, and consolidation. And if you look at the chart of Hershey's, a clear distribution phase, in the, second 2/3 of 2023, really, and it really bottomed out in December of last year. But for the last 3 months, it's really been in a bottoming phase. So as the markets rallied off of the October low, Hershey's has kind of been treading water. The reason why this came up on my list was I was looking at this trend line right here, which is basically just taking the recent lows. If you think of this as kind of a head and shoulders bottoming pattern, you have a low, a higher low in October, a higher low here in January. We've now just this week broken above that neckline. So I will be clear, I would much rather buy strength than weakness. So when something has been beaten down for so long, I usually encourage people just wait, be patient, and wait for signs of accumulation. And the reason why I wanted to highlight this is a couple things tell me we may be starting to see that accumulation. We're breaking above the neckline. We're back above the 50-day moving average. We actually broke above it, kind of sat on it there for a couple weeks, and now we're resolving to the upside. We're breaking above the January highs. So this week we're sort of pushing above a little bit. The momentum is getting stronger and stronger. So the RSI has kind of remained above 50 and pushing above 60 this week. So I think still a lot to prove, and I would be much happier, over time accumulating something like this as it continues to prove itself. But as sort of an initial long position, sort of getting started, something like an HSY making a higher low out of those swing lows seems like it could be a compelling idea. And the fact that this is in a consumer staples name, and not just that, a food products name, which have been an absolute dog of a group. If you're trying to find, underperforming groups, food products would be my go-to with like ADM and other really ugly names. But Hershey's might be the beginning here of something more constructive, I guess.
I don't know about you, Dave, but I've heard no indication that people are going to stop eating chocolate anytime soon. So that could be a pretty solid pick here, my friend.
We'll see, right?
There's a good chart.
There's always an appetite for something like that. Maybe the stock continues to reflect it. All right, we got to finish off with our last two. You're going in a little more of a defensive play in some ways, but gold stocks, metals, and mining have actually done quite well, remarkably well when you look at the charts. Talk us about the XME here.
They have. You've seen a lot of things like steel stocks starting to go nuts in the last couple of sessions. Once again, I really like the breakout here. You've seen metals and minings trade sideways for quite some time. But this is a space that has in the past, found some buyers and really outperformed the market. You kind of see that actually on the left side of this chart. If we drag this back a little bit more, you would see that XME really, really outperformed the market quite heavily in 2022. There was a lot to like there. I like the breakout on this. I like that it has been steadily bouncing off of the 50-day. I mean, this thing refuses to go below the 50-day. That is so many sessions in a row of just absolutely riding that thing higher. That's what I like. I want to see the relative strength pick up on this name. But I also like that you have the ability on a trade like this. We've talked about this a little bit in the past. I like to buy these breakouts that have something above that breakout level too, that kind of gives you a second entry point. So on a name like this, you've got a breakout kind of right around this period here, right around that kind of 58 level. But then you also have new highs above that around the 62 level. So if you do see the breakout hold, you've got kind of another potential entry point to add to that position if that second breakout works. So you can kind of structure a trade around these kind of multiple breakout levels on this. Again, you want to see this continue to hold some of those key moving averages. This is another case where the 20-day can be a little bit helpful. So you're seeing this thing bounce off of the 50, but you're also seeing it start to ride that 20-day, and you're seeing the 20-day actually start to turn around and start to move higher, which is a thing that I like to see. I believe if you jump back out to the long-term weekly on this one too, Dave, there are some nice things to like on the long-term weekly. Yeah, again, you're seeing a space that has been broadly outperforming kind of since actually the COVID lows back in 2020. You've seen overall XME has been a space that has outperformed, and again, you're kind of coming up on another breakout within a longer-term uptrend. So nice uptrend since 2020, has been consolidating a little bit more recently on the weekly. If we can see us break above some of those key levels, again, this thing could resume that uptrend on the longer term view and keep running higher. So I like the space.
Yeah, good chart. And gold, of course, sort of right around that $2,000 an ounce level, not too far below all-time highs. And it's really been an area of, I mean, you wouldn't think gold doing so well given that growth stocks are kind of leading higher, but gold is actually holding up there really well, much better than something like crude oil, which is sort of at the lower end of the range here. All right, I've got to wrap up with my last chart here, Grayson. Spotify, SPOT. I'm considering this a Grayson chart. This is my thank you and farewell sort of chart for our discussion here, because this is the kind of name I could see you enjoying. And I know we've talked about this one before, but again, I sort of go back to the basics. It's a reminder that even though we can speculate on what might come next and how strength or weakness may evolve, let's always remember that strong charts are strong charts, and price usually goes up for a reason. That's why I don't have a problem buying new highs if I think higher prices are justified. When you look at the chart of Spotify, obviously, a beautiful rotation from weakness in 22 to strength in 23. Besides this brief pullback in July, August of last year, the gap lower, you cover up that period. It's kind of this nice uptrend that is now resumed. And getting above the July high, gapping up, pulling back to test that retest level or that breakout level, and then continuing higher is what I like. I think Spotify is an important chart to watch because for me, this represents a bunch of growthy names that have done quite well. They've been great relative performers. They're in a position of strength. Many of these are overbought, right? The RSI is right around 70 or just above 70. And, generally speaking, when a stock is overbought, it tells me two things. Number one, it tells me that the long-term trend is actually quite strong because in bearish phases, stocks don't become overbought too much. So the fact that the RSI is even up in this range is probably a good thing. And if you look in general, 6 to 12 months out, stocks usually tend to be higher in that environment. But it also tells me we're probably a little overextended and we have a pullback. And I think what I guess gives me comfort with some of these growth names that have already had such a good run is they have clear levels to pay attention to below. So I think Spotify above 195, above 190, that would be the 50-day and the January lows. As long as we hold those on pullbacks, these are still constructive charts making higher highs or higher lows. So I think in February, watching names like this that are certainly overextended from a technical perspective, seeing where they would pull back to if that indeed plays out, making sure they're holding some of these levels of support, I think could be really constructive for strength going on through the second and third quarter of 2024. So I think we leave it with Spotify as a good example of a growth name having had a good run, probably due for a pullback, but still in pretty good shape overall.
Yeah, that's a great name. Great space.
That was awesome, Grayson. 10 name. We hit on a bunch of different sectors. We actually got to consumer staples. We had financials. We had some tech. We had some healthcare, industrials. We covered a lot of ground here, but hopefully demonstrating how there are opportunities. And what's funny is as we've been doing these monthly discussions, which we'll hopefully continue to do, I feel like we're always able to find ideas, regardless of what the S&P chart looks like. There are ideas out there, right?
Absolutely. That to me is the best thing about this kind of special. It's such a powerful reminder to us and hopefully to you guys as viewers such a powerful reminder that there's always something working. Even in the depths of 2022, there's something out there that's working. And in a funny way, those terrible times out there in the market actually become the easiest times out there in the market because the names of the number of things that are working is so dang small. So times like this, there's always something happening. There's always a breakout to be following. There's always strength to be found.
Grayson, always a pleasure to chat with you. Thanks for joining us remotely. Enjoy Southern
Of
California.
course.
Get back to us soon so we can keep doing good stuff up here in Redmond, all right?
Of course. Looking forward to it.
That's Grayson Roze, our VP of Operations, and this was our top 10 charts to watch for February 2024. Hopefully giving you some ideas about how we can use the StockCharts platform to really focus in on stocks with actionable setups. As a reminder, the way Grayson and I find names like this is by using our scanning engine, by looking for stocks having constructed patterns, looking for stocks in the past that have had good setups, and just looking for similar conditions. And it's also a reminder to use our alerts engine, because that is the way that you can manage downside risk on a name like Spotify, some of these other stocks that have had pretty good runs. Let StockCharts do some of the work for you and help remind you when some of those triggers may be hit, and then you can make sure that you manage risk effectively. For StockCharts in Redmond, Washington, I'm Dave Keller. Have a great one. Be well. Stay safe. We'll talk to you again soon.